Financial freedom means different things to different people, but the one consistent thing that I've seen across all this definition is the aspiration for a lot of people to live a debt-free life, which I can understand, because if you can eliminate debt in your monthly budget, especially the unproductive debt, you will realize how much more you can actually do with your income on a monthly basis. So recently, I also took it to Instagram to ask my followers to let me know what type of content I would like to see on my YouTube channel in March, or rather April. And on top of the list was debt consolidation. So in this video, we are going to be looking at what debt consolidation is. Why would someone consider doing a debt consolidation? What are the pros and cons of a debt consolidation? And what are some other things that you should consider first before opting for a debt consolidation? But before we get into today's video, hi everyone and welcome. I'm your host, Miss KK, and this is The Wave. It is your weekly show that looks at topics related to personal, family, and business finance. And our hope is that by the time we get to the end of these conversations, really you are better equipped to make sound financial decisions. So if you're new here, thank you very much and welcome. And if you're already a returning subscriber, an awesome appreciation for always stopping by and checking what we have in store for you. To start off with, we are going to be defining what debt consolidation is in simple terms. So debt consolidation is really just a process of taking different debts that you owe to multiple lenders, putting them into one loan, and at the end of the process, you will owe one lender and you'll be making one installment at the end of each month instead of multiple installments that you were previously making. So putting it in an example, let's just say you are a young professional, you have a furniture account with a particular shop, you have a mobile contract with a particular company, you have a credit card with a particular bank, and perhaps you have a cash loan with a micro lender. So that means you have 4 lenders that you are obliged to pay on a monthly basis different installments. So when you do a debt consolidation, you reach out to a company that offer debt consolidation services. This company will give you one loan. That one loan will pay off all these 4 different lenders. At the end of the day, you will no longer owe these 4 people. You will then only owe this one lender, and you'll be making one single payment at the end of the month. So in a nutshell, debt consolidation doesn't eliminate your commitment. It doesn't settle your commitment. It just transfers your commitment from 4 lenders to 1 lender. So that is the basic definition of what debt consolidation is. So with that understanding, why would someone consider debt consolidation? And in many instances, the people that are really opting for debt consolidation are people that are struggling to make all their commitments to this different lender in such a way that it's putting them at risk, because they are probably being threatened with, lawyers' letters. They are being threatened with repossession of these particular items that they bought, or they are being threatened to put on ITC and those things would have a negative consequences for them, and it also emotionally affects them. So they get to a point where they really just want to consolidate all their debt into one debt and hopefully get some favorable term from this new lender, and they'll be able to be in a better position to meet their commitment with a new lender, as opposed to be entitled or rather obliged to pay this 4 different lenders. Alternatively, you could perhaps just be going through a process of revamping your finances. You really don't want to be indebted to these multiple lenders, or you found a favorable way to restructure your debt, and you're not really doing out of need, but you're doing it out of a way to handle your finances better. So there are different reasons why people would consider debt consolidation, but in this video we are going to be talking about it in context of someone that is struggling to meet their payments to all these lenders and wants to actually just consolidate it into one debt. And currently, I understand why this video is highly requested, because we are living in high interest rate times. We've seen at least 9 interest rate hikes since they started because of the current inflation, and we are also expecting to see another hike next week. So if you are already struggling to meet your debt to these lenders, the more these hikes comes up, the more difficult it will be for you, especially if you have prime related linked loans. So really that is the reason why someone would consider debt consolidation and what debt consolidation is. So then let's get into the nitty-gritties of debt consolidation and the benefit and the disadvantage of debt consolidation. So let's first start off with what then happens in this process of debt consolidation. So you decide you have these 4 lenders, you don't want to be indebted, or you're struggling to make your payments to these 4 lenders on time. Then you approach one lender, they consolidate your debt for you, and then you only are entitled to pay, or you are only required to pay one monthly installment. So what this new lender would do, they will do a credit assessment, obviously, and they will consider your current income level. They will consider, your credit score, and they will also consider what is going on with the current interest rate in trying to give you an offer. But because they know that the reason why you are coming to them is mainly because you want to have a lighter burden at the end of the day, they are likely to push out your repayment term. So let's just say with your old lenders, you were maybe going to pay off your loan over 4 years. But because of the 4 years, the installment is slightly higher. So if you move on to the new lender, they may say, okay, fine, your original term was 4 years, but we'll give you 5 years such that your installment on a monthly basis is lower than what you were paying all this combined, all this multiple lenders. So you pay over a long term, meaning your monthly commitment becomes better. So it's easier for you to budget because you got slightly a breathing room from that reduced installment. But what you must actually watch out and evaluate carefully is the interest rate that you are going to be offered by the new lender. Because they are obviously giving you a loan over a long term, they are likely to consider the interest rate factors and circumstances that are applicable at the time of your extension. So currently, like I've mentioned, we are in high interest rate times. So let's just say for these lenders, they gave you loans during COVID when interest rate was low, and yours was a fixed interest rate, meaning when prime started increasing, you were not really affected. But now if you move over to the new lender would have to evaluate the current interest rate at the time. So by virtue of the fact that you're trying to consolidate your debt in a high interest rate environment, you are likely to get a higher interest rate. But it might still be better for you from a monthly basis repayment, because despite the interest rate being higher, it will be offset by a longer term, meaning you'll still be relatively off on a monthly basis because you are making a lower installment. However, if you look at it over the life of the term of the loan, you will be paying more in interest as opposed to you just sticking to the original term. So the moral of the story here is don't just jump at the opportunity of consolidating a loan. Look at how close you are to repaying those particular loans, and if you maybe should just tighten your belt in some other areas of life to be able to afford your installment. Or if it's really, really critical for you to move, try and see if you can fetch around for a favorable interest rate so that you don't lose too much by trying to consolidate your debt. So in Namibia, there are quite a few entities that are offering debt consolidation. The commercial banks definitely do offer the debt consolidation. I've seen NAMPOST also advertising debt consolidation. I've also seen Old Mutual Financial Services advertising debt consolidation. So you must just make a few Google search, a few phone calls in determining which will be the best option for you to consolidate your debt. So one of the advantages for consolidating your debt, like I've mentioned, you might get a lower repayment on a monthly basis. And because you now owe one lender and you are paying slightly lower, it may help you with your budget. The second thing is, if you are at risk of defaulting with your 4 lenders and you are at risk of being put on ITC and you are being threatened with a lawyer's letter, by you moving to a new lender and that lender having a slightly lower amount and that being able to fit in your budget, you will be able to sleep better at night, and also you are going to be protecting your credit score because you are avoiding being credit blacklisted, which will then impact your affordability going forward and also your availability to get future credit. So if you're finding yourself in that bad situation, by consolidating your debt, you actually might be relatively better off. The disadvantage of debt consolidation, though, is it doesn't eliminate your debt by virtue of the fact that the new lender has paid off your existing lender, your old lender. It doesn't now mean your debt is distinguished. You are going to still continue paying. You've just transferred your debt from one lender to another, so it just defers the problem. Like I've mentioned, if you are, for example, debt consolidating in a high interest rate environment like we're currently in, you could end up paying more. And also, if you get away with debt debt consolidation, it might actually not address the root cause analysis of your debt issue. So if you have an impulsive spending habit and that is why you got yourself into this unnecessary debt and you don't address the issue, you are likely to finish that debt consolidation process and fall back in multiple lending, situation again. So the moral of the story here is you need to address also the root cause analysis. What drove you into debt in the first place? Because if you don't address that, the debt consolidation is a temporary solution and you are likely to slip back into that old behavior. So that are some of the pros and cons of debt consolidation. And lastly here, I just want to round up in what can you do before you actually opt for debt consolidation. So in my opinion, debt consolidation should be the last resort. You should really only opt to go for debt consolidation if there's absolutely nothing you can do to try and meet your existing commitment to your lender. So what I would eventually do if I was in this situation, number one, I will critically evaluate my current spending by drawing up a budget maybe for 1 or 2 months, or basically going through my bank statements for the last couple of months and identifying where is my money going, what of those spending patterns are needs, wants, and luxury lives, and what can I cut back to accommodate this debt repayment that I'm at risk of missing. Because you could be having money leaks that could be eliminated that would help you manage your existing debt load better. So don't just jump at the opportunity of debt consolidation. You must first evaluate your spending habit. Number two, perhaps you must do a lifestyle downgrade in order for you to afford your existing commitment. So let's say, for example, you do an assessment and you realize, technically speaking, you don't have too many money leaks. You don't have, excessive eating out. You don't have excessive, impulsive spending, but perhaps there is room for you to downgrade. The first and the biggest downgrade you can make is the apartment you live. There is always going to be a place you can rent for cheaper if you are willing to downgrade, sell off some excessive items that you have that you don't need in order for you to accommodate perhaps a smaller place, in order for you to free up capacity in your income level. And hopefully with that freed up capacity, you can then put it in your debt repayment for you to be able to afford your debt repayment. And number three, perhaps see a financial coach or a financial advisor to look at your situation. So for many of us, we have a lot of policies, we have a lot of savings that we are doing, we have a lot of investments that we are doing, but some of the things are really not necessary or they are excessive. You would find someone has, maybe at work, they have the highest medical aid, but in reality, they are not really sickly people, so they don't need comprehensive cover. Perhaps downgrading your medical aid at work in order for you to increase your net pay. Perhaps there is room for you to restructure your salary at work such that you decrease your pay as you earn, such that your net pay is actually increasing at the end of the day. Perhaps you have insurance that is excessive. There was a time where you could not cede one insurance cover to multiple lenders. So let's just say, for example, you have a car loan and you have a house loan, and you took out 2 different insurance because previously you could only cede one insurance policy to one lender. So you're forced to take out 2 life covers or 2 credit life to cover the debt on your house and the debt on your car, because they're not with one lender. But that has since changed, and NAFISA has revised the rules, so you no longer need to have multiple life covers just to cover your debt. So if you see a financial advisor, they can maybe look at some of those insurance policies you have that are perhaps not necessary anymore, and you could revise your session letter such that you use one cover to cover 2 debt, and then you cancel the one policy in order for you to free up some capacity. And also just having a coach to guide you and look at your spending pattern, look at your savings, look at your insurance, and see if any of them that can be eliminated, because there is no point in trying to save if you are at risk of missing your installments. So those are some of the things that you really can do at this stage that will help you assess your situation, make sure that your situation is better before you go to debt consolidation. And again, I'm going to repeat here, don't just go to debt consolidation without addressing the root cause analysis of why you had fallen into that debt trap in the first place. Because if you don't, you are going to consolidate those debt, you are going to finish that debt consolidation process, and you will find yourself in another trap of multiple debts, and you're going to be stuck in that rat race, which is not going to get you anywhere. So really, that's all I wanted to explain. I didn't mean this to be a very comprehensive video. I just wanted to give a high level understanding of debt consolidation, and hopefully you got one thing or two from this video. Please let me know in the comment section below if you are going to consider debt consolidation, or if there's another aspect of debt consolidation that I need to touch on that you perhaps didn't understand. Again, thank you very much for your time. As always, please don't forget to like, subscribe, and leave us a comment below if this is the type of content that you'd like to hear. We will really appreciate. And remember to hit that notification bell so that you are notified every time we upload a new video. Until next time, it is goodbye, and please stay safe.